Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock. With news, financial markets are struggling to respond to the enhanced geopolitical threats and are doing so by not overreacting. In the background, volatility was lower and earnings reports were positive. A speech by Fed boss Powell is due soon. But first up today, the release of the important US Federal Reserve Beige Book was an irrelevant affair, reporting little change in October from September. All the usual strengths are on display, labour market for example, along with the usual threats, the housing market and inflation, although that is broadly easing in these reports. And the American mortgage market hit a new low last week. Mortgage applications fell 6.9% in the week ending October the 13th, the sharpest decline since April. Volumes now are at their lowest since 1995. Meanwhile, housing starts picked themselves up off the canvas in September from August, and the August unusual low, but they're still quite groggy. They're 7.2% lower than a year ago levels, which themselves wasn't a high standard. Building consents don't give any indication their residential new build market is about to recover. However, Canada is posting a good recovery in their housing starts and residential construction data for September. Data out from China yesterday was quite positive. The Chinese economy expanded 4.9% in the third quarter of 2023 from a year ago, slowing from 5.3% in the second quarter, but beating market forecasts of 4.4%. For a country as large as China, that is a big up surprise. Retail sales climbed 5.5% in September from a year ago, remembering essentially they have zero inflation, and accelerating from 4.6% rise in the prior month and exceeding market estimates of 4.9%. It was the largest increase in the pace of trade there since May. And electricity production rose 7.7% from a year ago, suggesting the headline growth may in fact have some substance behind it. It's the first time in quite some time that Chinese growth data has been led by electricity production. Housing market data in China, however, wasn't a positive, with their property market and investment slump deepening in September. However, it is actually quite positive that the growth they did record was consumer-led and without property. This de-emphasis from property is a healthy sign. The US Treasury 10-year yield is volatile today. At one point it was as high as 4.93%, but has eased back now to be at 4.88% and up only 2 basis points net from where we started yesterday. Still, this is a new modern post-GFC high. And the price of gold will start today at $1,952 an ounce and up $27 from this time yesterday. And oil prices have risen $2.50 to be at $87.50 a barrel in the US, while the international Brent price is at $91 a barrel. And the Kiwi dollar starts today at 58.6 US cents and down 0.5 cent from yesterday. This is its lowest level in almost a year. Against the Aussie, we're softer at 92.4 Australian cents, which is down more than a cent since the start of the week. Against the euro, we've eased back to 55.6 euro cents. That all means our trade-weighted index starts today at just over 68.7, which is down another 40 basis points from yesterday. Get more news about the New Zealand economy from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.